Closing cost explained. So what we're going to talk about in this video is a full breakdown of what's all involved in closing costs, your down payment, and a term that people get confused with in terms of closing costs, which is cash to close. So what closing costs is the amount of money it costs to pay everyone involved in the transaction. So it's not just the lender who is involved in receiving payment for the transaction. There are other people who get paid. Actually, there's a lot of people who get paid. There's attorney's fees. There's sometimes appraisers. There's insurance fees. There's title company fees. There's carrier fees who actually deliver the documentation. There is title insurance, which goes to there's a policy for title insurance. So I mentioned title. There's a title search. That's a part of the attorney's fees. Then the actual attorney's fee for doing the work. Then there's title insurance policy that is given to the buyer and the mortgage company to protect your interest after you close on a loan in case there's an error on the title that wasn't picked up, not necessarily even in your closing or transaction. It could have been a transaction prior to you purchasing in the home, and even the seller who sold you the home. So those two policies are very important. You have city taxes. If you live in the city, in a municipality, you have county taxes that go to the county for the tax, property taxes. Then you also have something called discount points, or you can have origination points. Origination point is to originate the loan. Some lenders charge 1 point or 1% of the loan amount to originate your file, meaning to take your file from start to finish. That's a fee that they charge. Another fee that's charged that I just mentioned was discount points. Discount points is what it costs to get the rate that you have. So a lot of times you hear about people talking about buying down the rate. Well, when you buy down the rate, those are called discount points. And I'm going to insert a fact here. Closing costs in 2022 is now higher than it was in 2020 and 2021 in most cases. Reason being because of the market has changed and interest rates have increased, more lenders have to charge discount points to get you to a particular rate so that you're not paying 6-7% interest rates. The discount points help you have a lower rate. Now, if you don't mind having a higher rate, the higher the rate, the lower the discount points. The lower the rate, the higher the discount points, which is equivalent to 1% of the loan amount. With all that being said, then you also have a processing fee that the lender charges, as well as an underwriting fee. Those are fees that pay the underwriters for underwriting the fee, and the processing processes the fees. So the items that the lender does charge and somewhat has control of is the processing fee, the underwriting fee, if they charge an origination fee, and then discount points. The discount points can vary based upon your ability to be able to take a higher interest rate, or if you want to pay down to get a lower interest rate because that's where you prefer to be, then the discount points can vary depending upon where you want to be at interest rate wise. All right, so then you also have prepaids. Prepaids, and I'm going to read the definition to you. Prepaid costs are payments made for closing upcoming light items on your new home loan. They're called prepaid because you're paying them and they're technically due. The most common kind of prepaid cost for homeowners is homeowners insurance, property taxes, and mortgage interest. So another thing that's on your closing costs on your in your closing costs is interest. If you close on the 15th of September, typically your first mortgage payment is not due until November the 1st. So what happens is you prepay the interest for October, and then that gives you technically what we call a free month of mortgage payment. So they collect those days of interest or 15 days of interest, and then that is into your closing costs, and that allows for your first mortgage payment to be due in November. Now, if you're trying to save on closing costs, if you close at a certain point of the month, it can't be, I believe, after the 5th or 6th of the month, then let's say you close September the 5th and you want to try to reduce some closing costs, your first mortgage payment can come due October the 1st. That will save you some on closing, but just remember, on October the 1st, you'll need your entire first 4 months of rent. That's something you can look into if you're looking for a way to cut in on closing costs. Now, another part of closing costs, cash to close, is the down payment. Down payment is what you pay down on the property. Depending upon which type of mortgage loan you're utilizing will depend on your interest rate. So example, if you are paying down payment for FHA and it's 3.5% of a $200,000 house, your down payment in essence is $7,000. Remember, your down payment is separate and is a separate number than your closing costs. At conventional financing with 3% down on a $200,000 house, you're looking at $6,000. On VA and USDA on a $200,000 house, you're looking at your down payment being $0. If you want to learn more information about the different financing options and the required down payment, such as FHA, VA, USDA, and conventional loans, you can check them out under my videos. This will give you a more in-depth outlook on the requirements for each particular program in terms of down payment, credit score, and what properties you can buy. So another part of closing cost is seller's credit. Seller's credit is where the seller is able to gift you or give you a portion of your potential closing costs. So the seller can give you a certain percentage depending on the loan type for closing costs. Example, for FHA, the seller can contribute up to 6% for closing costs. With USDA, the seller can contribute up to 6% for closing costs. For VA, a seller can contribute up to 4%. As well as conventional financing. And just to kind of keep it simple, they can contribute up to 3% if you put below 10% down for closing costs. Another thing that I want to make sure that I stress, I hear it from different professionals, and to me, closing costs cannot be a percentage of the loan. It's an estimate, but it's not going to be an accurate percentage depending upon the municipality you're in, the state you're in, or the county you're in. The taxes are going to be different whether you're in a city and a county or a county. Taxes in certain states, let's say examples, taxes in Georgia are going to be higher than Delaware. However, the transfer taxes in Delaware, if you are not a first-time home buyer, are higher than they are if you're a home buyer in Georgia, whether you're first or second or fifth time. So I don't like to give a percentage of what the closing costs could be based off the sale. I would say when you speak with your loan officer, just get an estimate of what your potential closing costs could be using the fees that they charge, as well as the fees that the other vendors charge. Now understand, and I said it previously in this video, the loan officer does not dictate all of the fees. So when they give you something called a loan estimate, which is given to you 3 days after you've went under contract, the loan estimate is just an estimate. Like it says, it's an estimate of the fees that the different vendors will charge. Later in the process, which is actually 3 days 3 days before closing, you will receive something called a closing disclosure. You'll hear terminology such as CD. CD is short for closing disclosure. So the closing disclosure will have more accurate numbers as to what your closing costs could be. Now, from experience, the initial CD does not have your final closing costs because we don't know if the file has been cleared to close or if the attorney and the lender's closing department have gotten together and did something called balancing the CD. What balancing the CD means is the attorney's office has put in their fees, any taxes and prorations that they need to put in, any real estate commissions, any type of fees that they have. They then take that document and send it over to the lender's closing department, and they review to make sure that their fees are accurate. The attorneys make sure that their fees are accurate. And then once they're both in agreement with what the amount is going to be based off the date of the closing they have at the time, they will say whether they're balanced or not. They balance it down to the penny. If anything changes, sometimes there are changes that happen the day of closing or actually at the closing table. But before you get to closing, you will have a number that you need to wire. So if you wire your closing funds, your cash to close, to the attorney's office, and it's too much, they will then give you back the overage at closing, or they'll wire it back to your account. If you did not wire enough, you have not taken ownership, and the attorney's office will either get you to wire the additional funds, or you can have if you have a personal check that's not over a certain amount, depending upon the attorney's office and the state you're in, it could vary. Depending on the amount of money you need to provide, you could give them a personal check that the attorney's office will be able to take. I hope that you find this video very helpful and useful in getting a better understanding of what encompasses closing costs. Now, we didn't talk about direct figures, but I gave you a outline or a breakout of what is included in closing costs and different fees different vendors and fees that are charged in the closing costs. If this video has been helpful to you, do me a huge favor and give it a thumbs up. Please subscribe if you like the content I provide. Do me a huge favor and check out some of my other videos that I have about the process of buying a home, as well as we have a home ownership success Facebook group that you can be a part of. The link is below. And I also am offering a homeowner's guide free of charge to you to give you some guidelines on the home buying process. This has been Kevin Jefferson, the People's Lender, NMLS number 1433853. For more videos like this, check out my video playlist, subscribe, and stay tuned.